Please use the sharing tools found via the share button at the top or side of articles. Copying articles to share with others is a breach of ft.com T&Cs and copyright policy. Email licensingift.com to buy additional rights. Subscribers may share up to 10 or 20 articles per month using the gift article service. More information can be found at JPMorgan Chase reported record profits in 2023 thanks to a windfall from rising interest rates and struck a bullish outlook on earnings for this year. The largest U.S. bank said on Friday that net profit hit 49.6 BN last year, eclipsing a previous record of 48.3 BN set in 2021. America's biggest banks have been winners from higher interest rates, charging borrowers more for loans without passing on the increase in full to depositors. JPMorgan's record performance came despite a weaker fourth quarter, when profits were hit by the bank having to pay 2.9 B as part of a so-called special assessment by regulators to recover losses resulting from the failures of several lenders last year, including Silicon Valley Bank. As a result, net income in the final 3 months of the year dropped to 9.3 BN from 11 BNs in the same period a year earlier. JPMorgan said net interest income, the difference between what it pays on deposits and what it earns from loans and other assets, was 89.07 BN for the year, ahead of its target for about 88.5 BN. Chief Executive Jamie Dimon said the U.S. economy continued to be resilient, but cautioned that a combination of spending on the green economy, the restructuring of global supply chains, and higher military spending might make inflation to be stickier and rates to be higher than markets expect. The bank told investors it expected NII of about 90 baht this year, higher than analysts had anticipated. Growth in loans would more than offset the impact from the Fed starting to cut rates again and savers continuing to shift to higher-rate deposit accounts, it added. JPMorgan's shares were up about 2% in pre-market trading in New York. Analysts at Baird wrote that the guidance by JPMorgan should be well received. While all the big banks have benefited from higher rates, JPMorgan has also been helped by savers' perception that it is implicitly guaranteed by the government because of its systemic importance to the economy. That has enabled it to resist the kind of increases in savings rates